Good afternoon. It's just gone midday. Welcome to Boom, Doom and Zoom live from lockdown Sydney. I'm Paul Rickard, and of course, joined by the founder and I guess the star of this program, Peter Switzer. Peter, how are you?
Now, Paul, you're the secret star. We all know that. But still, I'm quite happy to take the leading role as a so-called star.
Okay, well, I'll make you the star. Now, we're going to get to your questions very shortly. Good report from Telstra this morning, Peter.
Yeah, following on CBA's good report as well. And I believe also Goodman Group reported very well as well. And as a company we've liked.
Yeah, they did. I mean, they're off, I think, because it's so expensive. It's a bit like CBA. I'm not surprised CBA is off this morning. Look, a lot of the buying there ahead of the buyback. But when you look at it, it's priced to perfection. So, and I think Goodman Group is a bit the same, but no real surprises in those groups. Let's just go back to Telstra. I think the good news from Telstra was that the challenge for Telstra was how do they increase EBITDA? In other words, get earnings to grow for the first time in almost a decade. And they actually got a little bit of growth in the second half and a lot more positive in terms of how they expect the next year to play out, with EBITDA, underlying EBITDA increasing from something like about 6.7 billion to 7.3 billion. On the back of, you might not be surprised to learn, Peter, that they're getting more money into mobile. So, people have less competition, prices are creeping up.
Yeah. Look, Paul, I think it's good that companies that, we rely on the pay dividends are actually delivering now. And I must say that the Switzer Dividend Growth Fund here is an all-time high. I think it's Tuesday, $2.77. With all these dividends around, it's a good time for a dividend fund.
It is indeed. Okay, let's just go to just a couple settle things. Let's start with the obligatory disclaimer. John, I don't know if we've got that on screen, but let me just provide the usual warning. We don't know anything about your particular needs, investment objective, or financial situation. So what we might think is brilliant financial education can't be construed as personal advice because it may not be appropriate to you. It could be appropriate to someone else, but it may not be appropriate to you. So as we always say, before acting, always seek appropriate professional advice. So that's the most important thing. And then secondly, we've got questions in already, but there are two ways to ask questions. One is to click on the raise your hand button. Got to have a little speaker or microphone built into your laptop or wherever you're listening. So we'll unmute you and you can ask your question live. We like those questions because everyone can follow on. Or alternatively, you can just use the Q&A part, type the question in, and we'll get to those as fast as we can. Okay, so the first question comes in from Peter. Good afternoon, Peter and Paul. Thanks for the wonderful show. Is MP1 a good share for medium to long-term investors? One of your favourite companies, Peter, I think.
Yeah, well, it was. I picked up on it when it was quite low, and it's really has delivered. Now, let me say this to you. It has risen, as you can see on the chart, very strongly, come off the boil. I just think it is certainly a stock to hold for the future. And whether it's going to actually deliver short-term payoffs, it might be hard because there's been a massive rise out of the April low there. But I do think as we reopen and we get back to normal, the best example I think of MP1 is it is actually a business that gives other businesses enormous website capacity when there are sort of major things going on. The best example from Bevan Slattery, who was one of the founders of MP1, was he said, when it gets to Melbourne Cup time, the VRC needs so much bandwidth to cope with the amount of inquiries. Rather than having a website that's already geared up with all that capacity, they buy the capacity from an organisation like Megaport. And I think as the world expands into the cloud, Paul, and I know the cloud's kind of still in its infancy, a company like this is going to be well positioned. So it's like an infrastructure company that will benefit over time. So over time, yes, I think it will do well. It's just in the short term, because it's done so well in recent times, it might not deliver in the short term.
Okay. Don't know when they're reporting, Peter. I haven't tracked that one
I
down.
haven't
So,
reported yet. I'm not sure when, Paul.
okay. Let's have a next question from Peter. Your thoughts on PTB? That's just okay. I'm not sure I know much about that company and IFM. So I don't know whether they're covered by any of the analysts. Peter, are you familiar with PTB? We might have to take that on notice.
Yeah, I'm checking it out now. I think the answer is it won't be covered. Oh, no, it is covered, Paul. It's PTB, of course. They reckon there's 22.4% upside. Now, so therefore, I will check it out on Monday's TV show because it was covered by the analysts. It must have some sort of company form there.
Okay, and the other one was IFM, which is Infomedia. That's had a checkered history. That's in the, I think Media is probably the company, is their major competitor. Yep. IFM used to be covered by some analysts. I just don't know.
Yeah, still is. 42% upside. Obviously, they believe. See, Infomedia in particular, I remember, Paul, got stuck into elevator type news screens and all that sort of stuff. Clearly, no one's going to office blocks at the moment, so it's a reopening type trade stock. But there's another one. Well, John, let's have a look at that one on the TV show on Monday as well, because I looked at Media the other day in the story I wrote, and I thought it has potential when the world gets back to normal in 2022. Infomedia probably does as well.
Okay, just going back to Megaport. So CH, I don't know who CH, what that stands for. He says, hi guys, after MP1 reported, so they must have reported, must have missed that. They've been downgraded and the share price has fallen. Are you buyers at these lower levels? So I think you sort of answered that, Peter.
Yeah. I'm definitely, see, the analysts that we look at are more short-term predictors of where share prices go. I think MP1 has done the heavy work that I wanted to do when I first started talking about it. Now I think, to be like, next DC, Paul, I've noticed that it goes up, and it goes sideways for a while, then it goes up again. And the going up again will be when the capacity demand increases for a company like this. And at the moment, I just think lockdown is actually working against those kinds of big demands.
NextDC is a funny company, Peter, because it's on the screen now. You can see it's up at $13.21, which I find surprising. It's just gone up and up. But when it was about $11.50, you couldn't give it away, right?
No, that's right.
Nothing's happened to the company. Just suddenly people rediscovered it. So,
but Paul, I guess it is possible that lockdowns and all that sort of stuff, which helps Kogan's and all them, it means that there's more need for, a software as a service and all that sort of stuff that NextDC would benefit from, I would have thought.
Well, yep, I guess. I mean, I don't think the whole IT trend, more data storage, I don't think that trend is changing. So I'm a bit surprised. So, okay. This is a question from Ian. Your thoughts on Warrego Energy, which is WGO?
That's a WGO?
Yeah, Warrego Energy. I'm not sure I can add much insight on that one.
No, and I don't think the analysts will have it.
Okay. He also asked about, we'll have to take that on notice, and GR Engineering, GNG. You've got that one?
DNG?
Yeah, GNG.
Or GNG. Okay.
Yeah. I'm not companies that I have know a lot about, actually.
Yeah, analysts aren't covering it at all.
Look, we'll take those on notice, Ian. I'm sorry, we just can't give you anything of any insight there. So we'll just have to say that that's done. Okay, Nigel, a question, as I've traded in and out of BLY for a few years. Any thoughts as to the future? Oh, that's a tough company, right?
Yeah. Give me the ticker code again, Paul.
A BLY, Boat Longyear.
Yeah, okay.
Yeah.
Yeah, I was just looking at the G&G ones for a moment. It's been around for a long time, but it's not even covered by the analysts anymore, Paul. In and out. You've been good if you've made money getting in and out of that company.
Isn't BLY covered by some analysts, or they dropped it, have they?
They're not even covering it, Paul.
All right.
used to be covered, but it's just 31 cents now.
Yeah, I think a longer term chart would show that's come off a long way, hasn't it? Just
John, give us the longest term chart if you can.
Yeah.
Yes, it's been a. Oh, hang on.
It might have been a share split. I'm just worried about data somewhere there, but anyhow, just go back 5 years, John. Yeah, it's certainly been headed. Okay, we'll have to have a look at BLY.
Yeah.
Okay. Question from Hugh. Your thoughts on the Macquarie Capital notes, please. Hugh, I'll answer that. Look, it's a market-based margin over the bank bill rate. These of course, are hybrid securities. The margins are down to record lows. So I think Macquarie is about 2.9 or 3% from memory, which means the majors are around about 2.6. So they're record lows. That's my only hesitation. Macquarie is not going to be as liquid as any of the major bank hybrids. So I probably, I think when you get down to 3% on something like this, it sort of becomes almost it becomes a little bit unattractive for that type of name. So I'm not investing in Macquarie Capital notes, although I own some of their previous issues, not because it's not a current market rate, but I just think longer term, the margin's got a little bit too tight.
So Paul, I must admit, I've taken advice from you when it comes to hybrids, and I'm only interested in the big four banks, quite frankly. But what is the likely grossed up return for this Macquarie note?
Well, that is going to be with the bank bill rate at flat. It is going to be like the grossed up rate of about 3%. So,
well, on that criteria, they're better off going into like a bond fund like the Switzer high yield fund, which is going to be shooting for around 3 and get in and out of that pretty quickly.
Yeah, there might be some other options here. I just think it's getting a bit tight, but I'm not bagging Macquarie. I just think it's the lowest that margin's ever been.
Yeah.
And I'm just a little bit wary of that.
Less appealing.
Yeah. Okay. This is again from CH. Hi again. Would you be buyers of Elmo since its report? It's fallen away. It's fallen away a little bit. I'm not really sure why it fell away. I didn't think the report was that bad, but I didn't understand the rally last week.
Yeah.
And Peter?
Well, I interviewed Danny Lassam on Monday's show. So who was the questioner?
CH.
Yes. So have a look at the interview with him. Also, I tossed the question to I think both June Bailu and Julia, and neither of them were anti the company. Julia hasn't necessarily been a big supporter of Elmo. She said this is a company she thinks just going to do well in the future. It's not doing well now because of lockdown and all those sorts of related issues. But the interesting thing was, Danny Lassam said part of the reason why the market was a little bit negative was that the churn was a bit higher. But he made the point that that was like a gross figure. He said, if you look at the kinds of clients we lost, they were really low value clients. He said, we've kept big value clients. So my argument has always been Elmo is going to be a better company in 2022. I was happy that it went for a nice rise before reporting, and then on the face figure of the face value of the report, it seemed like the company's heading in the right direction. I just think it's worth sticking by at least the 2022, and I think it was a $7 stock. I'm not surprised if it gets back to $7.
Yeah, I'm sticking with them as well, Peter. I couldn't quite understand the rally last week.
Yeah.
Which took them from about 470 to 550 in the space of a couple of days, and I couldn't really understand the fall after the result report. So I think it's sort of a bit of, it was pretty much as expected, I thought. So
summary buying opportunity for the person who's prepared to wait, say, 6 months to a year. Okay,
a question here from Matthew about CSL. Why is CSL share price so range bound? Do you know when it will be reporting? Well, Matthew, we don't have long to wait. It's next Wednesday. That's when they'll be reporting. Look, I think the analysts are a bit negative on CSL for whatever reason. CSL has a habit of surprising on the upside, and I'm hoping they're going to do it again. That's my take, Peter. So I don't see any reason for lack of confidence in CSL.
Yeah, I'm with you, Paul, on CSL. Analysts got a target price of 301, but that's more short term. It does tend to surprise, a bit like JB Hi-Fi. They always report better than expected, and the market then takes off. I also think that the more America gets back to normal, the better the CSL share price will be. And I think that's going to be a beneficiary. America 2022 will be a lot better than America 2021 because of vaccinations. I think CSL will be a beneficiary.
Okay, sorry, Matthew, I didn't see the bottom of the question. You'd like to answer this question live. I didn't see that. Sorry, my mistake. Okay, question from Stephen. Good afternoon. Can you comment on Crown Resorts? Time to buy. Let's just have a look at. I haven't seen what happened to Crown the last day or two. With the West Australian Royal Commission now going into full pace.
Yeah.
Ah, dear. What do you think, Pete?
I just think it's quite significantly, it's a gamble. The analysts think about 28% upside. And look, I don't believe this business is going to disappear. It will have different owners. It will have a different board. All those sort of things will come to pass. But I think the business itself and the underlying, you know the underlying value of the assets without the gambling pause. It's about $9 or something, or $8.
Yeah, I think there's been a few analysts have tried to estimate what would happen if it lost its license and just sold its other assets. Yeah. I think it comes out at about, I think it was about $7.50. That was what one analyst estimated.
Yeah.
Now, I personally, I don't think Crown will lose its license. I think he'll be told to find a buyer and change its management and change its board and all those type of things. But I don't think the Victorian government, even if it gets a recommendation from the Royal Commission, wants to stop the business in its tracks.
No. And Melbourne needs it. It's a very important tourism mecca and stuff. And Paul, when you think about it, I'll put you on the spot. Would you rather, if you weren't invested in either AMP or Crown now, which one would you, and you're forced to put, say, 20 grand into one or the other, which one would you go for?
I'd pick Crown.
There you go.
And I think if I was tempted to go and play blackjack or something like that, or the machines there, I think there's better odds by investing in Crown at about $9.20.
Yeah, so, me too.
You know, I think your downside's about $7.50, and I think those takeover offers they'll come back, right? So I think you got the odds probably favour buying Crown, but it's a high risk, right?
And Paul, Crown's a reopening trade stock as well. When tourists come back, it's going to do well.
Okay. Yeah. Question from Kamal. With Woodside share performance, is ESG concerns the too easy rhetoric to pinpoint? After all, from October 20 to January 21, it went up 60%. Not that long ago, and ESG was around then too. Therefore, is it simple global Delta strain concerns, interim CEO, and major project decisions that the more probable reason for the share performance? Well, I have a go at that first. Well, certainly the latter two comments are right. I mean, there's an interim CEO, so the market would like to see that the right person in the job in the long term. I'm not saying the interim is not, but like to have that appointment confirmed. Secondly, you're right, there are some major project decisions that are outstanding. I mean, do they go ahead with Scarborough? Is Woodside going to buy BHP's oil assets and then issue a whole lot of shares that the BHP will then distribute? So they're all impacting the share price as well. I do think, though, a little bit of the underperformance this year is to do with ESG, and it's affecting all our oil companies. And I'm not sure that factor's gone away yet, Peter. No,
in fact, the easiest answer for Kamal was all of the above. I think everything he listed is right. He left one out. OPEC's not helping now. When that price spiked, OPEC was really playing hardball on supply, wasn't it, Paul? And the price was rising. So I think throw it all in, that explains why Woodside is where it is. If a lot of those factors unwind, the price will go up. I've got to say, I was happy I bought in at Woodside around $17 or so. So I'm kind of happy at the moment, but I am pondering whether I should take the profit and go elsewhere.
Yeah. I mean, look, it's hard to see any up where the catalyst will be. I mean, I think a new CEO would help. Some major investment decisions would help.
A growing economy worldwide, yes.
But, if you look at all our oil companies, they're all down, and I think it's ESG across the board. So Woodside has its own set of issues, but look, maybe it's too easy to blame that. It's very hard to know exactly what's going on with institutional fund managers, but you do get a sense that that they're not buying these companies.
Well, Paul, there's a story today, just quickly, where a group of small investors that influence a lot of funds have actually said to BHP, we don't want you to sell your fossil fuels to somebody else. They simply want them to close the business down. So, of course, BHP will never do that, but still, there's pressure there. There's real pressure on big companies around the ESG issues.
Yeah, I think a lot of these things will eventually just be taken private, and not have the scrutiny of being a public company. But I think there'll always be bias for assets that provide high returns, but the returns are going to get higher first, which means lower share prices. So this. John, I don't know if we could do this. An anonymous attendee who said we'd like to answer the question live. Can you unmute that, or if not, I'll read the question out. And one of the problems, folks, with Zoom is we're all in different locations, so I can't get any signal from John. But I'm thinking the answer is, John, can you see that question?
No.
Okay, so the answer is we can't. Okay, so we can't work that out. So the question is thoughts on ACL with higher test COVID cases and yield at 3.4%, a potential takeover. Yeah, I mean, the major pathology providers have been doing pretty well. I'm not sure why that makes it a potential takeover, just because you're getting a boom in pathology tests because of COVID. Do you want to comment on that? I'm not sure that one's covered by any of the analysts, Peter.
It is. It's they've got a 9.5% downside, Paul. So they're not currently seeing anything out there like that. I think if there was takeover likelihood out there, I think the analysts would be reflecting it in their share price.
I don't know enough about the company to say it's not a likely takeover, but anyhow, look, if you go to Sonic, which is a global business, but it's also doing a lot of the pathology testing here in Australia. SHL, John, just put up Sonic. That's had the same sort of chart. I don't think anyone's calling that a takeover, so I'm not sure why ACL would qualify. Okay, it's from Shabir. Thanks for the great show. Thoughts on Ansell, which is ANN?
It's a company that has continually defied its critics, hasn't it, Paul?
Yeah.
I'm just interested to see what the analysts are saying now. Not that the analysts have always been right on it. I think they have been.
Just noting, Ansell reports, according to my thing, on the 24th of August. So I think a lot of these companies are in blackout periods. So it's always Ansell's one of those companies that has done pretty well in terms of some of its recent earnings reports. And the market's sort of now, from not liking it, now rates it pretty highly. So I guess it's one of those companies got to keep reporting well. So I think if you looked at a 5-year chart on Ansell, you'd see pretty good growth, I think, John, wouldn't you?
I would have thought so, at least since the coronavirus. But what's interesting is there's been a big fall away, Paul, from $32 down to $26, $27. Analysts think 12% upside. And I must admit, I would have thought in this new world that we're going to be living in, even with vaccinations and all that sort of stuff, I think the idea of wearing masks and gloves and all those sorts of things are going to be with us for a long, long time. And I think a company like Ansell is kind of well placed.
Okay, question here from Adam. Thoughts on Bega? Can you do that one we could talk live for that one or not? No, John, it's too late, is it? Okay, sorry, Adam. But look, Bega, I'm not sure why Bega's come off the boil. I like Bega. And it sort of had a big fall. I think it got very expensive. I'm not sure why it went up from 5 to 6 so much, but I think it's looking reasonably attractive, Pete.
Yeah. Paul, on Monday on the TV show, either Jimbo Liu or Julia, I think it was Julia, actually talked through the reasons why Bega's come off the boil. A lot of their gains have been acquisition based. Mm-hmm. And they have usually tried to find acquisitions that have great sort of cultural fits or complementary fits with the products they've already got. And I just think that they've probably carried a lot of these acquisitions through. Some of them haven't paid off in recent times. But the overall feeling was, I think the analysts, I wrote about this on Monday in the Switzer report. Bega got one of his mentions. The analysts think there's 28% upside. So anyone who's toying with it, I know you quite like Bega, it probably is a buying opportunity, I think, for the person who's prepared to give it a go over next year.
Okay, we'll do a couple other questions here. From David, thoughts on Horizon? Is it a potential yield trap? Well, David, yes and no. I actually got asked that very same question a couple of weeks ago. It reported okay. You look at their guidance; they're guiding to lower earnings next year, despite their diversification more into bulk handling as opposed to transporting coal. But so I think if you're going to buy, the stock you buy when it's a bit of weakness. I don't think you need to rush in to buy it at $4, would be my guess. I think we'll probably see it back down to lower levels at some stage. So I like the company, but I think it's there's also ESG selling. I think you just afford to be a little bit more patient on that one in terms of when you buy, but certainly worth thinking about. Okay, question here for you, Pete. Hi, Peter and Paul. Your thoughts on Switz and SHYF, which is the Switzer High Yield Fund, especially for dividends, including franking credits?
Yeah. I tell you what, the best time to buy it was just after the crash, wasn't it? It got down as low as $1.81, and this week hit $2.77. Look, it's to me, it's a good, consistent fund. It'll range between. I think they're going to come in with a 4% plus dividend this year, plus franking credits. The beauty of it at the moment, Paul, I guess, is that dividends are really the flavour of the year for lots of funds. So the fund should show some pretty good results, but it is at all-time highs, and sometimes they do sell off. I've got to say, buying it when the market's off is a great time to buy Switz, that's for sure.
Yeah. Look, a couple of comments from David about Elmo. We won't go to the question, but he says Elmo, the report shows lower ARPU, which of course is average revenue per user, and increasing churn. Not a great story when they're trying to get into bigger companies. And then he says the underlying reason for the churn to Elmo is the size of the client. So we'll take that as a comment.
Yeah, and tell him to go and watch the video with Lesson, because he addresses all that.
Right, and there's something from Stephen says you cannot see the left-hand axis. John, I don't know what that means.
On the screen.
I can see, not sure what the left-hand axis is. The right-hand axis has got the price. We've got the stock code at the top, so I'm not sure what you're not seeing that I can't. Okay, so question here from Elliot. Thoughts on P&I?
P&I. Pinnacle.
Yeah. One of these investment management groups, always cautious on them a little bit.
They've had a fantastic run, haven't they, Paul?
They've had a great run. They've had a great couple of performing funds. It's, as we've seen, it's hard to do it year in, year out. I think the analysts do cover Pinnacle, Peter.
Yeah, they do. And it's a 6% downside, Paul. You can see that chart. It's been an absolute ripper. And they're not really declaring it's going to fall by much. So, but I think probably it would have been smarter to buy it in November last year. That was a terrific time to buy.
Right. Okay. The question here from Robert. Hi, guys. Thanks for your covering MNY on Switzer TV. Seems to have gone up since then. Also looking at getting into SECOS. I don't know what SECOS, but hard to find much analyst info on them. So I was interested in your thoughts.
What's the ticker code, Paul?
He's got SECOS, SECOS. I'm not a group I'm familiar with. Its code is SES. So you covered MNY earlier in the week, I think, Peter. Is that right?
Yes. Was it MNY?
Yeah, money. MNY. Let's have a look at MNY, which is Money 3 Corporation.
Yeah, that's right. MNY. That's right.
Yeah.
Yeah. And it got sort of thumbs up from either Julia or It's not covered here by the analyst. Yes, it had a nice little run. And I've got to say, the explanation they gave made me think this is not a bad organisation. Yeah, but I've got much more than what was said on the show, so I can't really call myself an expert.
Okay, question here from Michael. What are your thoughts on Cube? It's good company, Cube. I just don't know enough about what the price action's like. Let's have a look at Cube. We might wrap up on that, John.
Yeah.
So we'll look at some analysts on that one as well, I think, Pete.
Yeah. Analysts say 6.5% upside. You know, whenever I ask my expert buddies on Cube, they always like it. And as you can see, it's been a lot higher. It's been what, $3.25 or so. I think it's a good steady company, Paul. But John Bragg, just put that on there, and we'll look into Cube on the show on Monday as well.
Okay, the last question was from Andrew. He says, Paul, are your thoughts proving to be correct on the price of Endeavour? Well, I think they are, Andrew. I'm a bit surprised it's gone up as much as it has. I always thought it could be a buy. I thought we might see more weakness first. So I'm not buying up near here at $7, but I'm a buyer at lower down. But it's maybe lockdown is actually helping in some part because it helps part of the business. But, you know, I'm surprised it's done as well as it has. So
I think a lot of dividend players have bought Endeavour. I know Marcus Bogdan, who runs my fund, he was a big supporter of Endeavour for the dividend. I think a lot of other people probably done it for the same reason.
Anyhow, look, they'll leave it on that note. We're out of time. As always, we try to keep these shows to half an hour, and we'll be back next Thursday. Sorry we couldn't get to all your questions, and also those that wanted to ask your question live. We just couldn't quite get that technology to work today. So I think it was operator error at my end. I apologise, but hopefully we got to those questions. Next Thursday, we'll be back with Boom, Doom and Zoom again, 12 o'clock Eastern Standard Time. Have a great afternoon. We'll talk to you soon. Thanks for joining us.
See you later.